That's something that I think people need to really understand, that this is something that never ever happened before. Well, I think the conventional wisdom is that gold and silver dropped due to easing of the Israeli-Iran tensions, the signing of the temporary, or hopefully the long-lasting ceasefire, but that's not what it was. I mean, you had options expiration, you have the end of the quarter, which options expiration was today, mind you, and I think it's interesting that they really had a hard time keeping it at or near $36 an ounce. And if you look at the amount of contracts that they had trying to keep it below that level, it's really quite incredible. There were 76,617 short contracts to keep the price down. It's an all-time record. And here it is. It's right back up. The demand, the physical demand at that level is extraordinary. But to see gold down $100 since June 12th and silver a buck lower, that's not a reaction to geopolitical events or a cooling of the narrative. This isn't a natural correction. It's a managed decline, and it started Sunday night, and it went all the way down to today. But not only do we have the end of quarter and the options expiration, you have the July contract, which will go off the board, I believe, on Monday, the first day of delivery requests. And so we've been seeing tremendous deliveries come out of COMEX. I would expect to see that continue. Look, the prices were reacting long before any conflict had arisen in the Middle East, certainly the one that we're focusing on. But since President Trump was elected, you've had almost 820 tons of gold stand for delivery done again, and somewhere in the neighborhood of 9,000 tons of silver stand for delivery. The trend is not stopping, quite frankly, and you can see the amount of effort that the banks are using to keep it down. I mean, it's extraordinary when you figure each one of these contracts on silver are 5,000 ounces, and they're trading 76,617 contracts short to keep the price down. That reeks of desperation, and it reeks of stupidity, if you ask me, because you have a good portion of the world who is using that effort, that manipulative effort, to stand for delivery and rewrite the narrative. You could say the same thing is happening with platinum at the same time. So I think that how well gold and silver have held up through all of this is noteworthy, to say the least. So yeah, I'm actually quite surprised and quite optimistic that this correction is behind us, and that the amount of effort needed to hold it down is something that has to have the banks on their heels. And well, I mean, it is, on one hand, it is the central banks. It's what it is to me. More than, I mean, that's a good question, but what it is, it's that the gold and silver disappearing from the exchanges, that's the physical liquidity upon which this entire house of cards is based. And if you're pulling the liquidity out because it's standing for delivery, that's a problem. What you see in many cases is what's called a short squeeze, where the traders do not have the ounces of gold that standing behind the contracts that they have. And so they have to rush to get it in order to cover. That represents a short squeeze. So it is the buying of the central banks. It is the buying of the sovereign wealth funds. It is the buying of the biggest money in the world, the sophisticated money in the world, who is able to accumulate and stand for delivery, that is affecting the price at that level. And yes, it is exacerbated by these moments of panic covering in an environment where we continue to see delivery requests. And that's something that I think people need to really understand, that this is something that never, ever happened before. David Jensen does an amazing job on Substack of explaining this. He talks about, look, the LBMA is trading 200 million ounces of gold per day and 3.43 billion ounces of silver, with a B, per day. That's almost 4 times global mine supply per day, annual global mine supply per day, standing behind somewhere in the neighborhood of, I don't know, under 200 million ounces. That is the float. I think it's much less than that right now. So you're talking 12 plus times the float. What you're witnessing right now is a desperate effort by the West, who has always been able to easily manipulate the price of gold and silver through levered contracts, because no one ever challenged them by standing for delivery. And that's really the difference. And these deliveries continue to happen across the globe. So yeah, I think should be looked at as a very optimistic and hopeful development, where they have to expend that kind of effort to hold the price down, and yet it really didn't go down very much, didn't dip below 36, and if it did for a very, very short period of time, and here we are right back above it again. I wouldn't want to be as stupid and irresponsible as these banks are, having that kind of a short position in an environment where much of the world is challenging it through delivery. So yeah, it's to his question, I think a lot of it is short covering, but it's short covering because these players, whether it be central banks or sovereign wealth funds, are standing for delivery. That's what's different. An environment where we could expect to see much higher prices after the Basel III, maybe not immediately, but what it ought to do is make it much more difficult for these players to continue to suppress the price with unallocated paper, especially if they're standing for delivery, and especially if it starts to really negatively affect their balance sheet. This will become a game, I think, where that kind of position is considered foolhardy. So yes, ultimately in the long run, I think it's one of these deals where we can't expect it to happen just like that the moment the switch is flipped, but I think it is a trend that we are seeing where these banks already, it appears as though they're realizing this in gold. We haven't seen them capitulate in silver yet, but I think that's coming. And quite frankly, to have these unallocated, naked positions against the backdrop of global demand and global offtake is as stupid as a mud wall in a rainstorm. And I think it will have a dramatic effect. Maybe not all at once, maybe not at first, but over time, absolutely.
We have a question here on a slightly different tactic. Schwartz, ask Andy for an update on the BRICS in July or the Japanese yen carry trade.
And so, yes, I think the biggest thing to take away from it is the admission by Lavrov that these countries will be able to use the BRICS settlement system, which is trading central bank digital currencies across the bridge technology, which is mBridge, without the interference of SWIFT, settling in gold. We are seeing more and more rumblings coming out of the Shanghai Metals Exchange to open up exchanges across the network, across Africa and Asia and South America, to where that they will be able to internationalize gold deliveries from the Shanghai Exchange. The idea being we trade our local currencies over the mBridge, settle any imbalances in gold. Now, the pushback to many of these statements would have been the BRICS alliance is not big enough. Okay, fine. You add in all of these entities which are BRICS aligned. The Belt Road alone is 75% of human population, 50% of global GDP. You add in the Shanghai Cooperation Organization and the Eurasian Economic Union to this, on top of the Belt Road to the BRICS, and you are talking a massive, massive swath of human population, of global production, of commodities, of global manufacturing, of military might. And I think it's something that would be a huge mistake to underestimate, with the stated goal coming out of Brazil being to find a new settlement system that bypasses the dominance of the dollar and the SWIFT system. So to me, that is what I am looking to see, and that's a big one, a really, really big one. And you'll note that they're very keen in saying that this technology, this BRICS technology, the bridge, mBridge technology, is not compatible at dollars, pounds, and euro. So you're pigeonholing the West, and you are opening this up to the majority of the nations around the globe that are underdeveloped, that are resource rich, and that are looking to find a way not only to improve their standard of living, but to do so in an environment that perhaps is one that is more about cooperation rather than coercion, and converting to a dollar that has been very strong has been very difficult for these nations. As far as the Japanese carry trade is concerned, yeah, I mean, I'm surprised we haven't seen more fallout from it yet, but this is a situation that is unwinding. Of course, the whole premise of the carry trade was that institutions or countries or people could invest, buy or borrow in Japanese yen at next to nothing, at zero rates, and then convert to dollars and buy dollar-based assets, whether it be cryptocurrencies, whether it be Nvidia stock or Apple, whether it be Treasury. And that's unwinding as the yen goes higher and the rates go higher. That remains to be seen how that all plays out. And even the wild card, do they actually entertain joining BRICS, as people like Jim Willey have thought perhaps is in the cards. So there's a lot of fluidity. Now, again, the difference between this administration and last is the last administration, their actions were too stupid to be stupid. And therefore, it was obvious what they were trying to do. This administration, their actions are more subtle and maybe even a little bit more confrontational, but all leading to the same thing, and that is an increase in de-dollarization, an increase in unification by these countries, safety in numbers. And I think when you look at what's happened with Iran, and some people might think, well, maybe it's a little bit more than meets the eye. Maybe this is a shot across the bow with the BRICS, as in fact they are full BRICS members and are full Shanghai Cooperation Organization members. This will not be something easy, and I think these nations understand. You look at India, you look at Saudi Arabia, who seem to be straddling a little bit both sides. That's understandable. Until everything is set and everything is unified, this will be a slow-moving yet developing event. And I think people need to not focus too much on the immediacy of something like the BRICS meeting, but look at the pieces that continue to be put together. And as far as I'm concerned, this has not stopped. In fact, this is the biggest piece of BRICS bullish news that I've heard in the 4 years I've been covering it, and that is that they have the ability to offer this network to non-BRICS nations, with the exception of the euro, the pound, and the dollar. I think that is a massive shot back across the Western bow, and something I'm looking forward to see unfold over the next few weeks as that meeting starts here in the first. I have a bridge to sell you, and that's why, again, I bring up Jim Willey again, and his take is that the Federal Reserve is paying under the table to these countries to buy our treasuries. Now, could it be? I mean, it's certainly plausible, because who in their right mind would buy a treasury from the United States of any duration right now? At 4% interest rate or so on a 10-year treasury is just silly in an environment where inflation is absolutely kneecapping that. And this is why you get the lies coming out of the CPI, or out of the Bureau of Labor Statistics, namely the CPI, which tell us that inflation is under control, yet it's a different number than my grocery bill is telling me, than the restaurant bill is telling me, than the tuition bill is telling me, than the insurance bill is telling me. But I thought that inflation was under control. Well, no, I think it's a stated goal of the Bureau of Labor Statistics to not be honest with us for reasons such as this. And you can see President Trump certainly would like to see rates go lower, because we have somewhere in the neighborhood of, $9 trillion in debt that needs to be refinanced here over the next several months at rates that make it that much tougher. So, look, I just think that this is something that will have great fluidity, and I would certainly not underestimate the significance of what Sergei Lavrov has said by opening up this payment system to countries that are not BRICS nations, because they have an awful lot of nations that are aligned ideologically and other ways with China, with the BRICS, and this is a way to, I think, really, really accelerate the development of alternative payment systems to the dollar.
This isn't just about gold and silver anymore. It's about a global realignment already in motion. From BRICS nations challenging the dollar to record-breaking gold accumulation by central banks, the world is preparing for something monumental. Andy Schectman didn't bring opinions. He brought evidence, history, and a roadmap for what's coming next. If you're still sitting in fiat, still trusting a system built on debt and delay, you're not just unprepared, you're at risk. Now is the time to wake up, move smart, and protect what's yours. Hit that like button if this opened your eyes. Subscribe for more truth from voices like Andy Schectman. And remember, the new financial world is already being built, with or without you.